What was the upside of this marketing campaign?
Yeah, I don't.
The upside was very limited. Even if it was receptive,
Right.
Even if the market was receptive, the upside to this was very limited, and the downside was huge. So this marketing VP just did not calculate her risk reward ratio at all on this. So it backfired. They learned, and now they have to do damage control because their competitors are now nibbling at them.
Hello, and welcome to the Angel Research Podcast. I'm your host today, Jason Freer, and I'm here with founder and president of Angel Publishing, Brian Hicks.
Hey, Jason.
Thanks for joining me. You just got back from Florida?
I did, yeah. I was there for about a week.
Playing some pickleball down there?
Played a lot of pickleball. Weather was beautiful, and we try to play. My wife and I try to play every day, and the gym that we play at just built 24 pickleball courts, and we played on this one Saturday. And I swear, and usually most people play doubles, and so there's four people on a court, and so times 24, that was probably 50 people. And there was probably another 50 people waiting to get on the courts. And I have a funny story about that, to be honest with you.
Pickleball is exploding.
It's exploding. So the gym that we go to, you have to reserve the court, and you usually reserve it for about an hour or 2 hours. But on this day, on Saturday, because the demand was so high, you could only reserve it for an hour. So we're on the court with another couple playing, and then I guess the next group of people who were going to take our court came a little early, and if looks could kill, I'd be dead. This old guy, he was probably about 80 years old. All he did was just stare me up and down, and I asked him, I was like, well, "Are you next?" And we had it until like 12 o'clock, I think it was. So we had it from 11 to 12, and it was only 11:50, and for those 10 minutes, the remaining 10 minutes, all he did was just give me this, like, the Brits call him a git, which means just a grumpy old dude.
Well, I'm sure Florida has a lot of grumpy old dudes.
Oh, a ton. But, I was like, dude, you're in Florida. It's beautiful out. You're playing pickleball. Just relax.
You've been in Florida for a while now, or at least own property down there. The pickleball is a new phenomenon. What did people do before, right? Like tennis?
They play tennis and golf. In Longboat Key, where my house is, and you've been to my house in Longboat Key, at the very south end of the island is something called the Longboat Key Country Club, and they have it's a country club, and they have a big golf course. But now there's a fight going on because members of the club want to build pickleball courts. And so now there's like this turf battle between the tennis players, the golfers, and now these newly minted pickleball players. And it's probably going to go to court. But the whole point is that I just read something last week, I think. There's a huge imbalance on courts to players. There's 110 pickleball players for every one court that exists in the United States. So, companies that build pickleball courts, I've been told, have a backlog that's like over a year old.
Well, you can at least fit 2 pickleball courts in the space of one tennis court, right?
Yeah, it might even be more. I think it might even be 3.
Yeah, every tennis court, I actually make it a point now when I see it around locally, I look at, and pretty much 99% of them have the pickleball lines on each side of it too. So you can tell they were like doubling it, trying to repurpose a tennis court.
It's like
for pickleball.
Pickleball real estate is like a gold mine right now. And I just think this is really just in the beginning phases, because it used to be an old person sport. So it was unusual to see somebody below 50 on a pickleball court in Florida. Now you see teenagers, you see 20 and 30 somethings. So the upside to the pickleball market is huge.
So how do we play the pickleball boom? What is there a stock? What are the main like apparel like? Is there like custom? You know, like I don't know what's for tennis. I guess like Nike and stuff get into this game, but like there's certain companies that are big into golf. Callaway. Have these brands.
Yeah.
Is there like a pickleball like Under Armour?
I don't know. I read something in 2001. There was only one carbon fiber paddle available. Now there's like 110 different brands.
Right.
So there's right now it feels like a frenzy. I haven't found a way to play the pickleball market. If I were to be really cynical, I would say find robotic surgeons that do hip replacement and knee replacement because the injuries from these older people.
Well, that's going to be robotics in general. I think are going to be not just from pickleball, but just the aging population.
But
so
the market,
I think that's probably it too. I mean, we still got 10,000 baby boomers retiring every day or something. So they gotta have something to do. They can't all play golf.
Yeah, I mean the market is very fragmented right now. Like the top pickleball ball is made by Franklin, but but everybody's in that paddle space like Head, Franklin, and a bunch of other names you play.
So like the tennis, like they're because those are like tennis brands, right?
Yeah, and I read something. There's 50 million pickleball players worldwide right now. So just multiply that. Think about the scalability about that. You have this huge market, and if they all buy balls, I mean, this market is just ripe.
What's a pickleball ball feel like? I don't think
It looks like a wiffle ball, but it has sort of uniform holes all around it.
So do they like crack? Do they break? You got to reuse them a lot.
Sometimes they crack, and sometimes they become dead balls.
Right.
Like tennis balls can become dead balls. So you're constantly you're constantly buying new ones.
Nice.
And you know me, once I latch onto a hobby and I like it, I go all in. Right now, I probably have about $2,000 worth of paddles in my house. And my wife finally said, "Look, that's it. No more new paddles." So I'll use these for the next few years until the next great paddle comes out.
Nice. So while you were down in Florida, we had news broke of I don't know what we would call it, other than $5 billion being wiped off of Anheuser Busch InBev. After I don't even know exactly what happened, but they partnered with somebody that people didn't like, and it sort of blew up in their face.
So yeah, and this is all part of this whole ESG movement. ESG is an acronym for which means environmental, social, and governance. And for the first time in my lifetime, the government is considering U.S. corporations like profit is secondary now, whereas the primary goal of a U.S. company is social good. And I don't think those two are mutually exclusive. I think profits actually produce social goods. And so what you happen, there's this huge trend, and Biden's ESG law just got implemented maybe like a month or two ago, where money managers of retirement accounts can now consider an ESG score on the investments they make.
But they don't have to though, right?
They don't have to, but let's not get ahead of ourselves on this. We just talked about what I consider mission creep in the investment world.
Right.
Okay. So right now, you don't have to invest in companies with either a good ESG score or a bad ESG score. And there's like 3 governing bodies out there that rate companies based on their ESG. But you could see that the foundation, the groundwork is being laid for later for there to actually be mandatory, like 5% of your account has to be in ESG stocks that have a rating of above whatever it is.
And it sounds like that is the plan, and I guess people were trying to get out ahead of it. What I don't understand is what is the incentive for a company like Budweiser to do? Like, did they actually think that was a good marketing strategy? Because I guess they I don't think they fired the person who did it, but they put him on leave or whatever. They left or whatever. Like, was it just a bad marketing thing, or did they?
It's going to be a case study of the worst marketing campaign of the last 20, 30 years. And I'll explain why. That marketing campaign violated almost every rule of good marketing. Okay? So they partnered up with this social media influencer.
Yeah, I didn't even know who it was. I just saw the name trending on Twitter.
Right. And they promoted Bud Light during March Madness. And if you look at the marketing campaign, the influencer basically said they had no idea what March Madness was. So right there, at the get-go, you're already behind. And the one thing they did, so I'm not a big beer drinker anymore. I haven't been for a while, and so I'm not loyal to any brand whatsoever.
Right.
I make my decisions on what beer I'm going to drink that day based on my mood, the weather, the holiday season.
How accessible it is.
Right. So one day I might drink Guinness. One day I might drink Blue Moon. One day I might drink the Thai beer Sing Ha. I don't have a particular brand that I'm loyal to. But I can guarantee you that Bud Light has a loyal brand following.
Oh, yeah. I mean, it's the whole Bud Light versus Miller Lite is like the Coke and Pepsi of the beer world.
Right.
I guess you could throw Coors Light in there. I don't know. I feel like they're like third.
So that campaign violated like one of the primary rules of marketing. Don't give your loyal brand members an excuse to go somewhere else. And they did. So that's what happened. And, I feel like, especially alcohol, you don't really need to target a specific group to include. They're going to drink alcohol regardless of what.
Yeah, it was kind of strange because I when I dug into it, it wasn't just like it was like a TikTok, like social media. So I think they partnered with they were trying to I guess sort of pander or cater to each individual sort of subsect of it, which I guess in theory targeted marketing is effective. We do targeted marketing towards investors or people that are interested in the stock market. It makes sense, but when you're dealing with something like beer, it's kind of a broad market appeal, right?
Well, I think the market they were trying to target was already a market that was already maybe drinking their beer or would never drink their beer.
Right.
So, and all they
said basically, Bud Light had a reputation for
being a frat,
like frat guys, which I mean, sure, it's a light beer. You aren't you're drinking it when you're tailgating. You're not
what was the frat beer when we were in college?
Natural Light.
No.
Oh, you're probably before me then.
Yeah,
Milwaukee's best. Yeah,
which is
Beast.
Also the Beast.
They called it Beast. Yeah. No, you're right. That was disgusting.
But imagine Milwaukee's Best trying to target specific groups like that and violating its brand.
Yeah.
The company's stock took a hit. But the worst thing this marketing campaign did is what it gave Bud's competitors a blueprint of what to never do.
Yeah, they just got ammo. Yeah, they got a bunch of ammo to
right.
come out. There were so many memes coming around, and I guess you could argue, hey, it's publicity, no bad publicity, but it does seem to be. What's your take too on just the speed of the sort of thing? So we found out yesterday Tucker Carlson left Fox News, right? And I think they said like I don't know how much. It was like $500 million. It wasn't as much as Anheuser Busch, but like $500 million like off of market cap like that. Like, what's your take on just these wild swings? Are they sometimes opportunities? Like,
there are opportunities, but I would say that the Tucker Carlson, and we still don't know exactly what happened, but it seems like he got fired.
It seemed like, and they kind of just gave him a way to part ways,
and the market did not know it. There was no indication in the market that they knew this was coming.
Because the Anheuser-Busch thing, that was $5 billion was over a span of like a week.
Right.
It wasn't just like instant. This is like instantly like news just hitting and I guess that's a big deal because he's a big property for them. It would be.
Oh, he had over 3 million viewers on that 8 p.m. slot. So, look, Budweiser's going to be fine. They're a huge company. Bud Light is just one small segment of their product line. They have over 500 different, brews. They'll be fine. And plus, if they come out and make some sort of, act of contrition, which they've already started doing.
Yeah, I guess the main CEO tried to pretend like he didn't know what was going on. I didn't even know what was going on with this.
He may not have.
Yeah. Yeah, it's possible. I think the more, I guess, concerning, or the thing that people they're tying what happened with Budweiser to sort of a larger thing that seems to be happening. Because we talked about ESG, but these are companies that are making, this isn't like, they're not as far as I know, they're not following any sort of law that, like, they're actively choosing to sort of do these things. And I guess it was maybe a mistake, but there's some other stuff with just like the pandering of, I mean, Nike got a little bit, it was not nearly as Bud Light, but like doing the Colin Kaepernick thing, which isn't like as, the whole idea of like, hey, big companies need to go woke in order to keep up. Like,
what's the primary directive of a company? If I'm your shareholder
right.
at Budweiser, as a shareholder, what do I want to see?
Yeah, you want to see profits.
You want to see profits.
Yeah. So they think that these things are going to drive profits, and they are just, I mean, that was just a swing and a miss. Like, I guess we could provide some other examples of ones that maybe it worked. I mean, I guess you could argue the Nike thing actually worked. Like,
I mean, my question is, in an ideal world, if what was the upside of this marketing campaign?
Yeah,
The upside was very limited. Even if it was receptive,
right?
Even if the market was receptive, the upside to this was very limited, and the downside was huge. So this marketing VP just did not calculate her risk reward ratio at all on this. So it backfired. They learned, and now they have to do damage control because their competitors are now nibbling at them.
So, I mean, you've been passing around a couple of stories about, I guess you would call it's the environmental side of ESG, people going after oil companies, deflating tire. It seems like every other week you're telling me about somebody yelling at you when you're riding in your Jeep about, I don't know.
Well, it hasn't happened to me in a while.
Because you've been in Florida.
It was like 6 months ago, I guess it was. And, I live in a rural country part of Maryland. So it's pretty, let's just say it's conservative. And, I'm driving my Jeep Wrangler, which is, lifted and, the whole 9 yards. And I'm at a stop sign. And this young lady in a much smaller car was making a turn, blue hair, of course, and she just screams out the window, "Fuck you!" It's like, okay, or something like that. And so I knew it had to be, because, I wasn't doing anything wrong. I was just, sitting at a stop sign.
Oh, you were killing the environment.
I was killing the environment with my Jeep.
Yeah.
And
I mean, yesterday, I think it was Citibank and Bank of America were vandalized by climate activists.
For real, I didn't read that.
Yeah, so they had like their headquarters were spray painted, something about climate, no more oil. So that seems to be the sort of tactic too, is that like, hey, we're going to go after banks, we're going to kind of, sort of shame these corporations. So I guess in a way, some of these things that they're doing are trying to placate some of these, sort of activists.
Well, the beauty about the what were they called? Extinction something. This group that vandalized the tires in Boston and all around actually the globe. They hit 11,000 cars. So they went around and deflated tires of what they considered to be gas guzzling SUVs. What they didn't realize was probably all those people who had those gas guzzling SUVs were probably members of AAA. And so they had to call AAA to come and inflate their tires. And AAA comes in trucks. So
they all drove out separately in their big trucks to help the tires get replaced.
Right.
So, yeah, what else? Like, I just, we were talking about this earlier about just where is this all heading, right? Because, it seems good to, want to save the environment. Okay, great, and want to like do that, but like, what's the next step of like Biden's ESG law? What is
so? I was in Thailand several weeks ago, and not to call out Thailand, but the pollution there was crazy, and it's nothing like America's pollution is no way near what it is in Asia. I think it's something like 90% of all the plastic that's in the ocean comes from like 3 rivers in China. And, I'm cynical. I think this is a money grab, okay, by capitalists in the United States. They see a market. It's almost like, all the good oil and gas assets, all the good profits are over with. They were gone decades ago. Now we got to find something else to capitalize on. And we're going to capitalize on green energy. So, and it really changes with whatever administration is in office. During Trump, it was drill, drill, drill. Under Biden, it's we're still drilling, but it's just not as aggressive and as exciting as it was before. So, it depends on the administration. It depends. It really is just that. It could change. It could change on a dime in 2024. But having said that, electric vehicles are here to stay, I think. So, and there's gonna be a massive infrastructure investment in all the things that we need to mine for electric vehicles, and all that's going to take fossil fuels to mine all those minerals and metals.
Yeah, there seems to be a catch-22 with that, where like to do all this cool new technology stuff, you need materials to make it happen.
Right.
And people, I guess, don't want to just look. They don't want to know where it's coming from or.
I mean, of all those activists that deflated tires, how many do you think they use smartphones, iPhones, and laptops, and so all that technology is fossil fuel intensive. So there's a lot of hypocrisy. There's a lot of like feel good stuff. I feel like I'm doing well by the environment by doing this. But at the end of the day, it's all bullshit.
So I mean, at the end of the day, you're saying this ESG stuff is really just capitalism at work as well, just more like, I don't know, corporate sort of cronyism of like, hey, we're investing in these types of deals. They're trying to basically buy and then push people in that direction because they think it's going to help them make money.
My fear is that ESG is a pretext. It's going to be used as a pretext for a more sinister system down the line, and that's going to be a social credit system. So if, for instance, 5 years from now, the United States implements some sort of social credit system and I still own my Jeep, am I going to be penalized
You're going to be
for that?
you're going to be dinged.
Am I going to be dinged?
What could they do though?
Well, I'm of the age now where they can't do a whole lot. But I feel for like the younger people who are going to have to maybe apply for a mortgage. And the bank has to go through not just their financial history, but their social history and see if there's any red flags there. And if some of these young people have cars that are deemed bad for the environment, they might have to pay a higher mortgage rate, or they might have to pay more on their for the down payment for the mortgage, or their credit cards get confiscated. So all kinds of scenarios run through our heads, and that's what we do here. As you know, at Angels, we look at all the various scenarios of what possibly could happen. We hope some of the worst things don't happen, but it's you always have to be prepared for what if, and that's one of the things that we teach here is like the time to buy gold isn't when there's riots in the streets. It's when there's peace. That's the time. There's an old saying John F. Kennedy said, the time to repair a broken roof is when the sun's out. So that's our philosophy here as well. The time to get your house in order is when there's peace and calm.
Right. So what's your top investments right now? We had I think it wasn't last time we were on there, you had a prediction. I forget where it was for the stock market. There's actually been a lot of interest on that online. Just
calling me out?
Well, I don't know. What do you it was a 2023 prediction. So, I mean, it's April. Like, it doesn't, you know what I mean?
I mean, those predictions don't look, I made a lot of predictions. And right now, I'm sticking by my predictions. Maybe a little bit, maybe tempered, but some of my other predictions really, really exceeded what I predicted. Like for instance, Bitcoin.
Yeah.
Bitcoin. When I said when cryptocurrency was bottoming, that was in November, mid-November. It's basically it basically doubled from there. Same with gold. Gold is up about 20% since that recommendation. And you know me, Jason. I'm a big dividend investor. In fact, I very rarely these days just buy stocks solely for their capital appreciation. I'm looking for one, either just dividends or both capital appreciation and dividends. So,
any particular sector?
Oh, I'm glad you asked that question. So I brought my dividend statements just to prove to you how well I do in dividends. And so this is the last. Sarah, maybe we can get a zoom in on that. You see that? I've highlighted all the some of my favorite dividend payers, and they are all either oil and gas drillers or they are oil and gas transportation companies. Mm-hmm. And so, for instance, you can maybe see right there, Fling, FLNG. That is an LNG transportation tanker company that ships LNG all across the globe. And last month, they paid me $1,000 just to own them. So,
and that comes in every month.
Well,
not all of them.
Not all of them, but if you see this, right there is a check for about $4,400. And I get several checks a month, and there's another one for $600. So it's not unusual for me per month to make anywhere from $5,000 to $7,000 to $8,000 a single month. Sometimes they're bigger, sometimes they're smaller, but they're pretty consistent. So,
and you can still participate. How have the stocks done in the actual stock price of those since you've owned them? Or do you not even look at it?
I do look at them. Some of them are down, some of them are even, some of them are.
But you're basically getting paid while you wait for it to go back up.
Right. And I'm a long-term investor in these companies, so I'm not I'm not looking at short-term gyrations in the market. I'm looking at 3, 5, 7 years out. So I'll be sitting pretty good with these.
All right. Well, I think that about wraps it up.
All right.
Thanks for joining us today, and we'll see you next time.